Or to this y'all saying yes. Don't get too excited because I don't like to post stuff because I want y'all to be in the live call. I know sometimes people can't make it, but at the same time, I would rather you be in the call so you can ask questions as we're going through it than see part of the video, not understand the context, and then now you're just as confused, but with more information. So, all right, looking at this call. So looking at price here, right? So what we were doing, right, is literally just saying, all right, let's do this. Actually, I'm gonna hide this stuff instead. Whatever. All right, so practically what we were doing, right, is saying, okay, we're looking at this price action right now, and we wanted to find an entry, right? Everyone always asks me, how far do I go back, Kobe? When do I know where to mark up structure? What points of interest do I pick? Right? You wait till something shows up that you actually want to trade, right? So let's say we were the first person to ever make it to the chart ever, right? And this was the first candle ever printed, right? So we know that the low of our candle so far is this, right? The high of our candle is this, right? So we're just gonna, for now, mark this up as low. And the reason we're doing that is, as well, this is a good assignment to do for people who are still struggling with structure, right? The structure is something that's still making you a little bit confused. I very much so suggest this exercise. It's why I was doing this, but you can go more in depth with it to show how we take entries and build for, right? Glad I made this one. Struggling with entries the most. Good. We'll try to knock it out in 15 minutes. Don't you worry. So, all right, we've got our low and our 15-minute high, right? So, okay, we know this move is still continuing because this bullish candle, we haven't taken the previous low. And as well, we have another green candle ending, right? So we know this is all part of one push, right? Okay, this push is still going because we see we didn't take out the low of the previous candle as well. This green candle continues on, right? And notice how I'm not looking at anything over here, right? We're acting like this is the first candle ever made, right? Okay, and what do we see, right? We make another high, right? But we don't end with a bullish candle. So right now we can assume we're possibly starting that pullback, right? We're not going to assume the pullback has actually started until we take the bottom of this previous candle. But right now we do see price is slowing down a little bit, right? So let's wait to see what happens. Okay, price breaks that low, right? So now looking at this, right? When we're breaking this down, right, from a 15-minute perspective, right, what has now happened? Price created some type of push to the upside, right? And so that means we probably have what? Some form of demand, right? And that's our demand right here, right? So from a 15-minute perspective, we can be looking at something like this, right? So now that we have that, right, okay, what do? People always ask, all right, when it comes to substructure, minor structure, when do I know to use it? How do I use it? That's how you break down your range once you've already identified where you want to be, right? So now that I know I want to take entries inside of this 15-minute range, right? Meaning that from this bullish move, I'm probably looking to take buys, right? Because we repeat what happened in that range. I'm now going to move down to the 1 minute, right? So from the 1 minute time frame, oh, I forgot it shows all of this stuff too. Let's wait a second. Or I just don't want it to show all of them. Hold on. Let's go with this to here real quick and just hide that for a second. Okay. So now when we move down to that 1 minute time frame, right, what do we see? Okay. It's that same 15-minute price action we were looking at, right? But now when we're looking for our entry, right, we know we're looking to find our refined point of interest and our demand, right, that price is going to come to. So to do that, right, we need to start back in where that push started and see how did price actually make that move up, right? So starting from over here, what do we see, right? We have low, we have another low, and we have our previous high, right? Meaning that we did we did something along the lines of boom, 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 right? So we know that creates a chotch, right? If we create a high, low, and then we break the previous high, right? We've created a chotch, right? So we know price can buy from anywhere under that chotch, right? Now, if we go back and look at this, right, we see, okay, price creates that break here, right? After price creates that break, we come back up to get our change of character, right? Now, after we get that change of character, and this is using 1 minute structure, right? So allowing us to break it down a little bit more granularly and get more precise about where we want to enter, right? So after we see that change of character, right, what happened, right? Just like we know, right, whenever price makes a high, we're looking for that pullback in this range, right? We don't want price to do this, make a pullback, right? Go back all the way up here, then come back down into here, right? We want price to come back in right off that range. So in this case, we broke and came right back down into our demand, right? So in this case, we didn't pull super deep in, but overall, that now counts as mitigated demand, right? So when price creates this pushback up, right, this isn't where we're looking to buy on the 15-minute, right? Even though there's a lot of open area and stuff like that, we're not looking to buy here because, one, it didn't leave impulse behind, and as well, price is already mitigated, right? So in this case, we're waiting for this here, right? This is the point of interest I want because we leave imbalance or gap in price action, right? As we're making such an aggressive move, right? There wasn't buyers and sellers in this area, right? And the way to understand if you have impulse, right? Because some people have a hard time finding it, right? Notice how if I go left, right, or if I go right, there's nothing here. And if I go left, we have to go really far back before I hit something, right? So there's just a big spot of imbalance, right? Whereas everywhere else, right, if I go left, right, there's still a candle here, right? So it's touching on still stuff in these areas, right? There's no types of impulse. Even here, right, we can't go very far till it hits here or right there, right? This is the only spot that there's imbalance, right? So I'm waiting for price to come back to this POI because I know it started a very strong move because it left behind imbalance, right? Now, another thing I want to talk about while we're here, right, is how do we look at substructure, minor structure, and all the funky structure, right? I need you to understand, if you take anything from this call today, the market is a number game generator, right? What that means, right, is all of these moves are completely random, right? If Kevin Hart, Kevin O'Leary, and Kevin Samuels all decided today that they wanted to have the never mind. We're gonna add one more K. If they wanted to have the triple 4Ks, right, and they wanted to start up some bank investment fund or whatever that is, and they wanted to move the market, they are free to do so, right? They can buy as much GBP, JPY as they want, and now they can move the market, right? Nobody can plan for that. It doesn't help us with technicals, anything like that, right? So with that being said, structure is not always going to be 100% call it correct, right? We have a set of rules that we follow saying that, okay, price makes a high, a low, high. I'm considering this quote unquote bullish structure, meaning that most likely I'm looking to buy as price comes back down, right? Does that mean price is going to buy every single time? No. Price will break through this, right? What's the explanation? There is no explanation. Simple as that, right? We abide by our rules, and when things follow our rules, then we get into the market, take entries, whatever that is, right? But the reason I'm bringing that up, right, is we want to wait for something important to happen before we start looking at structure, right? If we just hop in on our 1 minute structure, we're going to get taken out all the time. Just like I was talking about earlier, right, about how when we're sitting in those consolidated ranges, no matter what you do, you are still on the wrong side of price action, right? And it's not necessarily about bad analysis. It's about bad timing and being in the market at the wrong time, right? So let's look at what happens here and why this example is such a great scenario of why you wait for your POI before we look to take our entry, right? Okay. So we see price, say we're starting from here, right? Same thing we were doing low earlier, right? Okay, we've got a low, 2 bullish candles. So we know some type of push is happening here, but overall we're sitting in this bearish range, right? So we know overall this was a bearish push, right? So we'll say, okay, what's going on? Okay, we make this high because we now see bearish candles happening. Still not very much of a pullback, so it makes sense price could still pull into here, but let's see what happens, right? Okay. All right, what? Price just puts a wick here. A lot of you know I don't like to use wick breaks as a break of structure, so that's not even important to me, right? What does price come back up? Takes this liquidity. Why is that liquidity, right? Because price never created a break of structure here. For me, that's not a real break, right? This was liquidity then because it's a weak high. Price comes up, takes that out, and then what? Comes right back down and takes out this low. So no matter what these people did in this like 5-minute range, right, or 10 minutes, whatever, nobody was right. Now, after this break of structure, right, we have nice high created after taking a high, very nice break of structure. So this is 100% a valid move in the sense of, say this had been upside down, right, and this tap right here was into our POI. This would be completely valid, right, because we tapped into our POI only, right? So now coming back up, we could look for this entry, right? Okay, cool. Looks great right now, doesn't it, right? Tap, breakaway, and we've already broken structure in one candle, right? But the problem is when we're messing with structure that's just in a random spot, the job of this supply zone is to break the low that it created. Now that it's done that, its job is completely over. It does not have to continue pushing us down here, right? We knew from this point, right, that we wanted price to get here, but that doesn't mean it has to be clean structure on the way down, right? In the sense of respecting higher highs and higher lows. We can come down half a pip away, go all the way back up, and then hit it and then go, right? So with that being said, as I said, right, in this area, we don't know what price is looking to do. So more or less getting into our entry, right? Now we come down, push down right into here, right? We see price comes back up, right? Blah, 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 blah. Looks like, oh, that would have still been a great entry, right? No. Price comes up, takes all of this liquidity before we even end up hitting our POI, right? And same thing, if you got aggressive in here, right, you might have tried to take this because you're like, oh man, I've already missed the entry. No, price never hit our point of interest. So we're not looking for anything yet, right? Boom. Price hits our point of interest, right? So I'm looking for, where was the last high we made? Right here. We had bearish push, green candle that tried to make a push up, and then we have this high. So if I can see a chart here, that's how I know I'm looking for my entry, right? And I'm going to speed this up a little bit to get us to why we're doing this for the entry, but I wanted to explain everything so when we get to that part, it makes sense. So now we see that price is pushing up, right? Okay. Boom, boom, boom. As I said, y'all know I don't use wick breaks as chart. So that in this case was where it went off of, right? Came back down into supply here, and that would have been your entry, right? For me, once again, I wouldn't have caught this up. So continue on with price, right? Now we see it hits this 15-minute high, right? So in the sense of breaking this down from a trade plan perspective, right? Why or how would we look for this, right? Now, this entry, as I said, did not play out, but if we add this one on, oops, we're going to wait to add that one on, and we're going to go over this, how we did this, and show how if you repeat the exact same steps every time, you will find your entries eventually, right? So let's talk about what our steps were here, right? And we're just going to take this out. Go ahead and unhide this. Go back to that 15-minute. Do a little bit of that. So why is this not showing? This? Ah, there we go. Let's go to 1 minute. Why do you no show? There we go. Cool. So let's talk about what we did on our 15-minute, right? And this is how we create, as I said, our trade plan based off of, this is what we would call a case study, right? If you're backtesting it, it's not as much of a case study because there's room for error in the sense that you might do something wrong. So when you're doing a case study, typically what we want to actually do is you can really go in and just cherry pick, right? Find exactly what you want to find, the type of entry from the POI, from all the way from your higher time frame down to your entry to your exit, right? So then we can try to build a process to replicate that, right? So how did we find this entry and how did we go about doing it, right? Okay, let's talk about it. First, we started on our 15-minute time frame, right? And we were waiting for a break of structure, which in this case, that break of structure would have technically been this stuff, right? But more or less, we want that break of structure, a mitigation, and a creation of a new high, right? So if we look for that on here, right, what do we see, right? Okay, well, we can say we had our break of structure, right? Did we mitigate something? Yes, there was a POI back here that we knew we mitigated, right? Did we create a new high? Yes, right? So for me, these are the first steps I'm taking because that does what? It tells me and confirms to me my range, right? By knowing that I've created a new high, that gives me the top of my range. By knowing I had a valid mitigation, that gives me the valid low of my mitigation. Valid low of my range that I know price should not go above. And then as well, that break of structure confirms to me direction, right? So these three pieces are the most important from my higher time frame, right? Because I know at what point is the higher time frame no longer valid to look for buys. At what point have we finished the higher time frame goal in the sense of, let's say, where should my target be for my entry, right? And so on and so forth, right? So that's how we're starting our top down from the 15, right? Now that I've gotten that break of structure, so think of right here when we started to go back and notice that we were in that pullback, right? So once I know that I'm now in my pullback, I can actually go to my lower time frame and start looking for an entry, right? Now on my lower time frame, right, I'm going to my 1 minute straight away from 15, right? So what am I doing, right? First, I'm looking for my unmitigated POI or order block, right? And that's this right here. And just like we talked about, I'm not doing a single thing until the next step is touched, right? Which is tap into my POI. So all of this does not matter. If we get a chop early, it does not matter. Until we tap my POI, my entry criteria is not valid, right? So we tap my POI, we get a change of character, and now I'm entering on the newly created supply and demand zone, right? My stop loss will be under the low of the supply or demand zone. My TP will be at 15-minute high, and my risk will be 1%, right? Even if I was, well, I'm not blind, but even if I was a computer, right, I can practically plug this formula in, and this computer should be able to find this exact same entry, right? Obviously, a computer can't, specify candles, but realistically, say I gave this to Nez, right? If I gave this picture to Nez and I told him to do these things, he should theoretically get the exact same entry as me when he's looking at this, right? So once again, from earlier, what I was saying of why this is how we want to create our perfect entry is because if we know that this is what price looks like, right, and we can go in and mark all of our points out and say, okay, this is what a chart would look like. What are we going to do? All right, we can save a screenshot, and I'm going to send this in chat as well. Trade plan EX1, right? So if we said that was our example 1 for our trade plan, right? Let's say you go make 15, 20, 30 of these, right? Now between the 15, 20, 30 of these, right, you're going to look for your commonalities. Okay, well, I can see actually on all of my entries, I waited for price to tap in, get chotch, and then entered there. Some of them I actually didn't wait for that break of structure for. Oh, okay. Some of them didn't have a mitigation or right? Finding out what works best for you and going from there. So I want to now show y'all how that would work if we were on our 15-minute, because oddly enough, well, not oddly enough, that's how price works. We can go and look at this next piece of structure and notice it literally does exactly what we've been talking about. So let's go ahead and delete all of this because now we can just pull up what was already on there. Okay. So now what would we be doing, right? Let's go ahead and why is this not showing anymore? What? Where'd the little thingy jiggy go? There we go. Now we turn this on. Cool. So, all right, if we were starting here, right, what would we be doing, right? We know that our range that we'd be looking at, this is kind of choppy and ugly right now, but not even the craziest stuff in the world, right? But what are we looking at, right? So we know if we're on our 15-minute time frame looking for an entry, we're looking for a break of structure, mitigation, creation of a new high, and a break of, and then we're going to go low, right? So let's start on this time frame and see if we have that yet to start looking for an entry, right? Okay. Well, we see, all right, price has mitigated, right? It's that 15-minute tap or 1-minute tap we know from our lower time frame that we did get, right? Price did create a break of structure. Wick break, not as great, but for this example, we're going to use that. That's fine. Creation of a new high. Yes, we did, right? So I also want to see a red candle before I go lower or a break of structure to the downside. In this case, we don't have a lot of candles, so that's why we're just using that, right? But even in your trade plan, right, that may be something that you're noticing isn't a consistent feature, right? So if it's not consistent, you might end up taking it out, right? So now that I've seen the creation of my new high, my mitigation, my break of structure, and I didn't get this last one, but I've gotten all 3 of these, right? So now that I've gotten these, I can start moving on in my trade plan, right? So I know that now tells me from these steps to go lower, right? If I go to my 1 minute now, right, I can see, okay. Yeah, I thought this was already played out. Okay. Now, if I go lower, right, what am I looking for, right? Just like our trade plan said, hold on 1 second. I want to bring that back into view. Why you make this so hard, please? Okay, cool. So just like our trade plan said, what are we supposed to be doing right now? Looking for our unmitigated POI or our order block, right? Okay. Now that we have that unmitigated POI or order block, we're looking for our tap into our POI, right? So we know right now nothing matters until we tap into this green point of interest. So let's see if that happens, right? Price just dumping down, right? Boom. Now we finally dump into our POI, right? So what are we looking for in this case, right? Our change of character, right? Which is breaking the last high before we came into our point of interest, right? So if we look, even though this candle doesn't look that important, we made low and it attempted to put up some high, right? So the last time any type of sellers interacted in the market was here before we got to our POI. So if we can break this, I can look at this as some type of change of character. And then what? Enter on my newly created supply and demand zone that change of character gives me, right? And then as well, what am I going to do with my stop loss? Am I going to put my stop loss at the swing point? Am I going to put it at the overall POI? Am I going to put it at my newly created zone? Well, for me personally, in my trade plan, I like to go with the newly created zone. Some people like to go with the overall POI to be safer. Some people like to go with the swing point to be safer. For me, I like this. It gives me more risk to reward, and I'm okay with the losses that I will take. That could have been a win if I had my stop loss here, because once again, it fits my trade plan, and that's what I'm going to consistently try to repeat every single time. So now what do we see, right? Okay, we get Chach because we've now taken that point out, right? So what does that tell us happens next in our trade plan, right? Enter on the newly created stop supply and demand zone, stop loss under the point of interest, right? And then we tap in, right? And as well, where's our TP? 15-minute high. So we put it right there, and our risk would have been 1%, right? So boom, we literally just let price do its thing, right? And one more thing I want to talk about as well, if you're the type of person who likes to take partials, you like to cut some of your position early, that as well needs to be a second step in your TP, in your plan, right? If you want to let your trade go to full TP, you need to have that in your plan. Trade management is just as important as your BOS, mitigation, creation of new high. All of that stuff is just as important. So if you're someone that at the first break of structure, you want to go break even, or you want to take off 20%, then you need to also put that in your trade plan. Okay, M1 BOS, I'm looking for, let's say, a break even, right? Or M5 BOS, I'm looking for my first partials, or whatever that is, right? But same thing. It needs to be something that is completely repeatable, and you can go in and say, all right, this can be identified without human discretion, right? In the sense of saying, after we get a volume push, or after it feels right, I'll take profit, or after I'm up $100. Those things don't matter and are completely up to your discretion, right? Which why it matters is you're going to make the wrong decision every now and then, whether it be emotions, whether it be FOMO, revenge trading, whatever it is. You want to avoid having to make an actual decision as much as possible. This stuff right here, there was no human thought going through this, right? We knew we were looking for this, then this, so on and so forth, right? So by time we hit our TP, we didn't really make any decisions, right? We didn't come up with any new things to do, right? None of that. All we decided to do was follow the plan that we found works for us previously before. So once again, I was recording this. That's right. So from the start, we went over, right? We went over and found what does a perfect entry look like to us, right? We create a plan based off of what that perfect entry looks like. And then we go back and test our plan. Does this actually work? So now I'm not going to do this because I've already back tested my plan, but now what you could do with this, right, is go back test, right, and look for, let's say, 50 to 100 entries or a decent chunk of entries, right? And you can say, now I have a data set that tells me, okay, over time, out of 100 entries, I'm going to win, let's say 70%. And on average, their risk reward was, let's say 6R, right? So my equity curve should overall stay profitable long term, right? So I hope this helped a little bit more today on going over kind of how we look for our prime setups, or not prime setups, but what is a prime setup to you, in the sense of creating that case study on finding what we're looking for first, identifying the pieces of it that we want to break down to be able to look for each time, and then as well, pulling it through the entry. So once again, hope that helped. Oh, you got to run. Cool. I hope we finished up just in time. All right. Should be able to copy playbook and execute. Yep, exactly. This man is spitting. That's funny. But yeah, so that's really it for this. I'm going to go ahead and end that recording here.